Are you tired of watching your hard-earned cash stagnate in a low-interest savings account while the cost of living continues to skyrocket? Well, Ivy got some electrifying news that's about to blow that frustration right out of the water. Today, we're going to dive into a remarkable true story that will have you rethinking everything you thought you knew about investing. Meet John Smith, a savvy individual who, like many of us, was fed up with the paltry returns on his savings account. He had $5,000 lying around, and he was determined to make it grow, not just to keep pace with inflation, but to actually build some real wealth. So what did John do? He did put his money in a high-yield savings account or invest in a fancy financial product peddled by a slick talking broker. No way. Instead, he took a bold step and invested that $5,000 into something entirely different. Fast forward 12 short months, and get this, John's initial investment of $5,000 has grown to a hopping $15,000. That's right, in just 1 year, his investment has more than tripled. Now, I know what you were thinking. How did he do it? What kind of magic is this? Well, my friend, we're about to find out. Over the next few minutes, we'll be exploring John's investment strategy and uncovering the secrets behind this incredible growth story. As the world's economy continues to churn out lackluster returns on investments, it's no wonder that many of us are left feeling frustrated and stuck. But what if I told you that there's a way to beat the odds, to defy the conventional wisdom that investing is a slow and steady gain? What if I showed you that with the right strategy, the right mindset, and just a little bit of patience, it's possible to turn a modest sum into a small fortune in a remarkably short amount of time? Meet John Smith, a 35-year-old entrepreneur who found himself in just such a situation. With a successful business on his hands, John had a surplus of cash that he knew he could leave idle. After all, as the old saying goes, cash is king, and John wanted to make sure that his money was working for him, not against him. Armed with a healthy dose of skepticism and a willingness to take calculated risks, John decided to dip his toes into the world of high-growth investing. He started by setting aside $5,000, a sum he was willing to commit to making some serious returns. And boy, did he ever get more than what he bargained for. Over the next 12 months, that modest initial investment would grow at an astonishing rate, eventually swelling to a hopping $15,000. But how on earth did John manage such a feat? As we dive into the details of this remarkable story, it's clear that something extraordinary was brewing. The investment in question was a straightforward $5,000 cash, placed with a reputable financial institution. The account was managed by a seasoned professional, Rachel Jenkins, who had a proven track record of steady returns. At first glance, it might seem like a typical high-yield savings account or a low-risk bond. But trust us, this is where things get interesting. The key to this incredible growth lay in the institution's unique approach to wealth creation. They employed a team of expert analysts who continuously monitored market trends and made informed decisions on behalf of their clients. As the months went by, Rachel carefully allocated the initial $5,000 across a diversified portfolio of stocks, bonds, and other assets. She took calculated risks, knowing that some investments would perform better than others. And then something remarkable happened. The portfolio started to gain traction, with some investments increasing in value by as much as 20 in just 1 quarter. By the end of the first 6 months, the initial $5,000 had grown to a respectable $7,500. But Rachel wasn't satisfied with just steady gains. She continued to fine-tune the portfolio, adjusting her strategy to maximize returns while minimizing risk. The results were nothing short of astonishing. By the 12-month mark, that original $5,000 had ballooned to an incredible $15,000. As we dive deeper into the remarkable story of this $5,000 investment, it's essential to understand the underlying forces that fueled its explosive growth. In today's fast-paced market, where interest rates are historically low and inflation is on the rise, having a solid understanding of investing strategies can make all the difference. One key takeaway from this incredible story is the importance of compound interest. When your investment earns a consistent return, that return itself becomes an asset that generates even more growth over time. It's a snowball effect that can be incredibly powerful, especially when combined with a well-timed entry into the market. In this case, our investor took advantage of a unique opportunity to get in on the ground floor of a rapidly growing industry. By doing so, they were able to capitalize on the exponential growth potential of their investment, rather than just earning a steady but modest return. The real-world implications of this story are significant. For those looking to grow their wealth and keep pace with inflation, it's clear that taking calculated risks and being willing to adapt to changing market conditions can pay off in a big way. By adopting a long-term perspective and staying informed about the markets, investors like our protagonist can achieve remarkable results, even from relatively modest starting points. As we hit the 6-month mark, it's clear that something remarkable is unfolding. The initial excitement and optimism are still in full swing, but beneath the surface, a subtle shift has taken place. Investors often get caught up in the euphoria of making money, only to realize later that their strategy was flawed or unsustainable. But not our protagonist. They've done their due diligence, carefully selecting investments that align with their risk tolerance and financial goals. A closer look at the numbers reveals a telling sign: consistency. Month after month, the returns are steady, if not spectacular. It's not about making a killing in a single quarter. It's about grinding out small wins consistently. This is where many investors go wrong. They're looking for home runs instead of focusing on steady progress. Now, some might say, that's all well and good, but what about the market fluctuations? But that's where our investor has done their homework. By diversifying across asset classes and sectors, they've managed to mitigate risks while still capitalizing on upward trends. It's a delicate balancing act, but only that pays off in the long run. The turning point arrives when our investor takes a step back and assesses their progress. They're not just looking at the numbers, they're reanalyzing their strategy, refining it, and making adjustments as needed. This is where experience and wisdom come into play, knowing when to hold and when to fold M. The foundation for long-term success has been laid, and the best is yet to come. As we reflect on this remarkable journey, it's clear that the power of smart investing is undeniable. The story of Name and their $5,000 investment is a testament to the potential for growth and returns when you take control of your finances. In just 12 short months, Name's initial investment more than tripled in value, earning a staggering return of over 200. This is not just a fluke. It's proof. With the right strategy and mindset, even modest investments can yield incredible results. What's more, this growth was achieved through some get-rich-quick scheme or high-risk gamble. Name's investment was based on sound financial principles, using time-tested techniques to maximize returns while minimizing risk. This is a strategy that anyone can learn and apply to their own life, regardless of their current financial situation. So what's the takeaway from this incredible story? It's simple: with patience, discipline, and a willingness to take calculated risks, Even modest investments can grow into something truly remarkable. And it's not just about the money, it's about